of the Greg Knapp Experience radio show, Sean O'Hara, President of Revenue Shares Investor Services. Jeremiah McWilliams is from the St. Louis Post-Dispatch. That's Middle America. And Peter Schiff is our big perma bear. He wrote Crash Proof, How to Profit from the Coming Collapse. All right, let's start with Sean O'Hara, because I think he agrees with me, and I'm going to stack the deck. Sean, I say the recession is dead. Will you second that emotion?
I'm not sure that I'll second that emotion, but I will tell you that I think it's time to start thinking a little bit more bullishly about stocks. I think what you need some kind of an impetus to get stock prices moving. And if you look at the amount of money that's in cash as it represents a percentage of the market cap of the S&P 500, it peaked at 60% back in this recent cycle. That really is just an unbelievable indication of how fearful people were. That money is starting to move back. It went from 60 to 48 back in February and March. It drove up stock prices around 30%. That average, if it goes back to normal, goes back down to the mid-teens, 12, 13, 14%. Right. And if that happens, as these folks sit around and they start to see some good signs, or they get bored with not making any return, or they get jealous of their neighbor who's put their money in and starting to make money, that money will come back in, and we believe it'll push stock prices back up.
Yeah, you know, Peter Schiff, we looked at all these numbers. I just ran through them all. But we just showed a chart that showed you that since the March lows, 4 major indexes are up like 30, 40%. And at some point, how I feel about my portfolio, like 29%, 45% for the NASDAQ, at some point, couldn't that overwhelm a whole bunch of detailed durable goods numbers and all that other stuff?
Now, you know, I think the good news is your record of inaccurate forecasting looks like it's going to be safe. I hear there's so much talk about green shoots on CNBC. It's like I'm watching the gardening channel. But the reality is, if those green shoots exist, right, we have trillions of dollars of stimulus. And just like the stimulus of Bush and Greenspan, you get an artificial boost. But it's going to fade, and this time it's going to fade a lot faster, and the hangover is going to be worse. The real problem is we're suffering from an overdose of government stimulus right now. And the more they artificially hype up the economy with cheap money and credit, the worse the recession is going to get.
Peter, how are we suffering? Don't you wish you'd been on the market rally when the S&P just rose 30 or 40%?
Well, wait a minute. Well, yeah, I've been long foreign stocks that have risen 2 and 3 times as fast. And, and the weakening dollar is only exacerbating those moves. I mean, we're making more money abroad, but what we're doing to ourselves is we're exacerbating the problems for the economy. Our economy is suffering because we borrowed and spent too much money. And now what we're doing is borrowing and spending even more. What we need is to rebuild our savings and to produce more, and we have to allow inefficient companies to go bankrupt, and we have to stop trying to subsidize the very behavior that led to this predicament.
Okay, Jeremiah, you know what Peter just said? I call it the hair of the dog that bit me approach. I mean, big debt and easy money got us into this mess, and yet more debt and easy money can get us out. What do you say?
No, it can't.
Dennis, I think I appreciate your optimism as a cynical reporter. I find it refreshing. But I think it's just a little premature, because I think it is premature to say we're out of the recession when you still see the economy shrinking. You still see us shedding jobs by by tens of thousands by the week sometimes.
The backward indicator there, my friend. But here's the other thing.
Hang on though. If people are losing jobs, they're not going to be funneling money to money managers. They're not going to be buying houses. They're certainly not going to be buying GM cars. So I feel like we've got to be careful about saying the worst is behind us until the job market comes around in St. Louis and
the
other
thing is, Greg Knapp, the thing is that if you wait too long, the turnaround runs right past it. It's too late to get in.
Well, that's true. Listen, first of all, man, I love your optimism, your energy, all your charts. It's fantastic. And I'm a glasses half full guy, preferably beer. But I've tried that hair of the dog thing that bit you. It doesn't work. And I'm afraid that you're jumping just a little too fast, too far, because, look, we're still at negative 5.5%, and I know that's a lagging indicator. It's catching up, but I'm afraid the government's going to make it worse. I agree with Peter. We're talking about an energy plan that could be $2 trillion worth of taxes and just destroying our economy. This health care bill that could be another $1.6 trillion. I mean, you're talking about taxing overseas profits for the companies here. That's going to shed jobs here in America.
Greg, you are killing my buzz, man. You're killing my buzz.
But that stuff's going to happen.
all the stuff you guys are worrying about is something that could happen 2 years out, 4 years out.
Okay, let's look
but
at
in
what
the
they're already
meantime,
doing.
you
Hold
can
on,
miss
hold
out
on,
on a
guys.
lot of wealth.
Let's look at what they're already doing with the spending and the deficits and the debt. And I'll tell you, from the people I know in my neighborhood, they're still scared, man. Now, I agree with you that you can get in and make money on stocks right now. They're going up 20, 30%, sure, because they were down 40 and 50 earlier.
All right.
But that
But
you also,
Gentlemen, we're going to continue this conversation on the other side of the break, okay? Got to wrap right now and a little later.